The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. Once more into the breach do we go, dear friends. And as always, we like to come to you at this time.
The following takes place between 2 p.m. and 3 p.m.
And what's the market doing now? A collective yawn. 2370 on the S&P cash volume, 2.27 billion shares. Today is the day that we go delta neutral for expiration a week from today. 80% of the time, this will be the low of the day today will be the low through next Friday. It is not rare, but 1 out of 5 times, maybe 2 or times a year, you'll get a counter move into expiration. You can make a lot of money, especially if you have puts in those, as most of the time they don't work out. But I'm looking at this market. It looks like it's at best going nowhere if you think you want to be bearish. And if you're bullish, probably going to bounce your way a little bit. I suspect that in the next couple of days we could see maybe one of the sectors start picking up some of the weakness and moving higher. Of course, I thought that today, and we'll see how the markets close out, but it looks like I may be wrong on that call, at least for today. But we shall see. Of course, the dollar coming lower, going higher, excuse me. Got to a high of about 102.18 on the dollar index. It's printing off at 102.10. Kept on trying to get up into this area. We've seen some huge sell-offs as the Treasury Department, I'm speculating it's the Treasury Department, has gone whole hog to try to keep the dollar from going higher. It looks like that is becoming a tougher and tougher proposition. That is hammered oil, which I thought was probably going to go higher at $50.93 right now. And, of course, gold headed lower off about $7 at $1209.30. It's the last print I show here. Of course, the bigger problem is that China continues to go a little higher or flat. But copper continues to pull back. Yet again, it's under $2.60, $259.80 right now, off another 2 cents today. And that tells you that generally there's weakness over in Asia somewhere, but no one sees it or they're not paying attention to it. And the question is, when do they start paying attention? But I suspected that maybe we were going to have a big bounce in energy, which did not come today. And I don't know what else you can say about it other than that. As always, we like to have a little bit of history to start the show off with.
That it's all just a little bit of history repeating.
And a question before we get to history. It says, do you have a view that you'd like to share on the DX if the border adjustment tax gains steam? And no, I don't. Am I going skiing? The answer is no. But the air conditioning is broken here, and it's about 50 degrees. And it just keeps getting colder. And they'll be here as soon as the show's over to fix it. What else do we have? Yeah, it's a pleasant 80 outside and a pleasant 50 in here. The problem with making predictions is you've got to have some kind of track record, and I don't know where you go to find how border adjustment taxes modified the market. I think anybody's guess is good on that one because you don't have any history that even rhymes to go back on that one. So I'd say it's a big unknown. But But at the moment, I don't think it's a lot. I think it's more speculation than possibility. So we will see. As we said in history, on this day in 1955, Harvard economics professor John Kenneth Galbraith testifies before the U.S. Senate Banking Committee, warning that the market is overheating with a substantial element of speculation. That's this day in 1955. With radio stations carrying his remarks live, the market drops even as Galbraith talks. The ticker ends up running 9 minutes late by the end of the day, and the Dow closes down 2%. When Galbraith breaks his leg skiing later that week, he gets letters from angry investors saying their prayers had been answered. And this is during a period also that I don't think people think about. They always go, well, there was the dot-com thing and everything else. You know, this is 1955 is right in the sweet spot where everybody was piling in bowling alley stocks like they were Apple, but Apple in 1989, not Apple of 2003 or 4 when it had hit a low. And the valuations on things like Brunswick make, well, Tesla still blows that out of the water. But they were pretty ridiculous back then. But kind of interesting. I really recommend a book that he wrote called A Short History of Financial Euphoria. It's only like about 100 pages. It's a very fast read from John Kenneth Galbraith. And a very interesting, I think he wrote it in 1990 or 92. But very interesting, especially when you were thinking about spotting bubbles. So I'll continue to look on that. The Brunswick, I think, got bought by another company, and I'm trying to remember what that is. Because it's been bought by another company. But it was AMF bought Brunswick, and then AMF got bought by somebody else. So we're down here kind of meandering around at 2367. We're off a whole point now in the S&P cash. Volume 2.3 billion shares. Just not that much happening. Well, if you want to celebrate out here today, we can certainly do that. There we go. The S&P posted its 100 consecutive trading day without a decline of 1% or more. Its longest such streak since 1994, according to Paul Hickey of Bespoke Investment Group. But as he points out, that shouldn't deter investors from buying stocks. If you flip a quarter, you're going to get a long run after a while. And the question is, are we ever going to have some volatility? And the answer is yes. It's just going to be in a while and not today. But I don't know. As soon as I said that, probably means we're ready for some volatility, isn't it? Anyway, I'm not making a great deal out of what happens today, as for the most part, I suspect it has a lot to do with options rollover. I'll be able to run some numbers between 3 o'clock and 4 o'clock. I will be back sitting in the 4 o'clock hour. And we'll talk about how some of those options look and what they tell us about the next 7 trading days after the close today. Give me a call, 877-927-6648. Email me at pat@tfnn.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Well, it's a very quiet day in Lake Wobegon when it comes to earnings. And there's really nothing happening in the next couple of days that's going to move the market. So I don't see anything changing out that way. But we'll watch. Again, we're at kind of close to the lows of the day on the S&P cash, but that's only off 2 points on the S&P cash, 2366. So we'll look at some of these stocks. Breaking out today without some volume is BioCryst Pharmaceuticals. This has had a pretty good day, a little more volume in the last few days, but certainly you wanted to see probably in the neighborhood of 8-10 million shares. Got about 4 million shares so far. So we'll want to check out how that one closes today. Bit Auto Holdings, BITA, another one breaking out. This one does have some decent volume. You needed about 500,000 shares. You got about 1 million shows so far today. And, of course, I guess we ought to just skip ahead to PPG. They make windows and automation. This thing spiked up to 113.46. It's given a great deal of that back here, I think, in the last hour or so. And back into the trading range, which is kind of interesting. What else do we have for big movers out here? Xterra, Extreme Networks. Nice pop, huge volume. Good sign of a breakout. Give a little bit of this back on a day where we're starting to fade later in the afternoon. And what else we have? Global Blood Therapeutics, GBT. Huge move in this one. This thing's been moving since about 16 bucks and 45 days ago. But this looks like some of these things are having some big moves with some volume today. So it's not all stocks go to heaven, but certainly a couple of these do have some decent volume. Himax Technologies, HIMX, blowing through its recent highs of the 21st and 22nd of February. Those days had the high of a little over 10 million shares. Got 15 million shares over the several days, but today just 8 million shares. So this one may come in light. H&R Block looks like people are going to be paying some taxes this year. Huge volume, huge pop, and pretty much looking to get out of this trading range that it's been in for since, what is that, June 10th of 2016. It's almost a year. This thing's got a lot of steam built up if it can break out. LABU, which is, of course, the biotech funds, had a little pop out here, but not a lot of juice, 1.5 million shares today. This one, you know, you should have been able, with the volume you had on March 2nd, to go up here and tag 55.88. Wasn't able to do that today, kind of going counter to the market. That may just be too many people short on it, though. We'll see tomorrow. LXRX, which is Lexicon Pharmaceutical, up against its previous high. Some very decent volume yesterday compared to today. 1 million shares. You need about 1.7 million shares on that. Momo has got some Momo. A nice day yesterday. And you know, you got a good sign of strength out here today. And this one, as it breaks above the $28.34 high of November 8th. Nectar Therapeutics, another biotech out here playing with some highs. This one's doing it with a huge volume on the 2nd of this month. Today, still got some fairly, you know, decent bullish action. But I think this thing was going a little higher. PBYI, which is Puma Biotechnology, another biotech kind of popping out here without a lot of juice today. 2 million shares. You really don't need that much to make it through this February 21st high. You just needed 1 million shares. So this thing kind of looks like it's done its bottom, other than the fact it's had this huge volume low on March 2nd, which suggests that it's going to come down and test 28.95 before it goes back up. But could be pretty good out there. PLCE, the Children's Place, another stock that has a sign of strength with volume and a good breakout. Nice consolidation pattern. Starts back on the 17th of November. It ran till yesterday. Today, huge pop, 4 million shares and counting, and you only needed about 600,000. But that's probably a little too hot. So look for this thing probably to pull back over the next couple of days. But nice consolidation around 105 to 108 would be the place to buy this. We talked about PPG, RDUS, Radius Health, little pop, no volume. This thing is just in an asymmetrical triangle. SCMP, a little flying out here, but Sucampo Pharmaceuticals, again, right back up to resistance on this one, needs a little bit more juice. We'll take a look at the decliners today and see what we have in those. Okay. Take a look here. Yeah. They're talking about margin calls in crude today. Wow. $50.48. Okay. That's something. Okay. What do we got? And just keeping an eye on things out here. 2365 volume, 2.4 billion shares. On the downside today, Bojangles. It's kind of a chicken restaurant. I think this thing had kind of been hanging up at highs because of some buyouts of Popeye's chicken. Down, volume's okay out here. It looks to me like it's headed back to the $16 range. CRC, which is California Resources, coming back and filling its gap. This one actually doesn't look that bad. CRC had a nice gap up on November 30th that went up with almost 12 million shares. Just back into it with 3.5 million shares. CRK, this thing, it's just back to a previous support level. CRZO, which is Carrizo Oil. This thing has blown through the previous low, but really not a lot of volume so far. 1.9 shares on the August 2nd, 2016 low, which is where you'd look for support on this one today. March 8th, $28.35, 1.5 million shares. So not a lot of juice in these. We'll see how the end of the day comes up, though. Merge Energy Services LP. A lot of these energy stocks look like they're coming back into some support levels. This one doesn't look all that bad. Had some gaps up with 1.5 million shares, back into it with about 700,000 shares in EMES today. EXPR Express actually broke through its recent lows, did so. Volume is picking up. You probably want a little bit more volume before the end of the day. Confirm. Ferment Centriol, which is, I think, a energy company, down. Volume not all that exciting, back into this gap up that goes back to the 30th of November. On 6 million shares, you got about 5 million shares so far. We come back, we'll look at some more decliners, then we're going to look at some stocks giving some signals and maybe 52-week highs and lows. See what else is going on around this market. 2364.5 right now in the S&P CAC.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're back. What do we have going on here? Everybody's watching crude and making comments of it. Crude comments. Can you imagine that? Anyway, $50.27 is what I have out here, which is down just a little less than $3 today. And it just looks like a nice little washout. Didn't see much in the EIA numbers. It kind of already took a hit before we got started with the API numbers from last night. But not a lot to see here at the moment. We'll see how the day ends, whether or not the crude people can come back from a beaten GDT. Nice move down in this one. Quick look. Global telecom and technology. Nice move down, huge volume. It looks like it's headed back down to $22. HCLP, another one down. High Crush Partner, another energy company. Again, you know, you had some nice gaps out here that are getting filled. You need 1.7 million shares. You got 3 million on this one, so that one looks a little sick. IDT down, headed back to its lows, fairly strong volume. Petrobras down strongly. Volume certainly picked up from yesterday and the day before. November 14th, $9.14. Looks like where this is headed, which is down, what, another 15 cents? 25 cents. Do they all look this horrible? The answer is no. Maybe something's going to change. Maybe it's the dollar out here. SM Energy breaking through its recent low and doing so right now on just about the same volume. July 8th, 23.55, 3 million shares. We've got 2.9 million shares, so we got to assume that this is probably going to close a little lower than that with a little bit more volume. SN, which is Sanchez Energy, this thing, been looking for it to come back to 950. Certainly looks like it could fill this gap, you know, maybe in the next day or so. But not a bad-looking chart. Huge volume on the way up on the 13th and 17th. Energy has been very light on the way back down. Today we've got a little pop in it, but a lot of these things look like they're setting up for some very interesting buys in the equities. Tronox, TROX, had a nice pop-up on energy on the 21st of February. Did so on 6.2 million shares. Down kind of in this gap, back with 1.5 million shares so far today. We also have Whiting Petroleum, another one out here that's filled its gap. This gap goes back to the 30th of November with 82 million shares. Did so today with, 21 million shares. So, again, you know, nice pop on energy, went higher. Nice pull back on lighter energy. You're back and you're filling this gap. Question is, does it go down to the next gap of about $9? But, you know, the charts in the sector do not look that bad for the equities. You know, we're at $50.08 now on oil. So the on West Texas anyway. So the question is this just a rout that'll be over? And I think we'll have the answer to that today on whether or not anybody comes in and buys this thing before they close today. What else do we have? 52-week highs. Take a quick look at some of those out here and see what we have. Array Pharmaceuticals. Not much to say in this one. Just up with volume about the same on yesterday. AF, which is Astoria Financial. AF. Big pop yesterday, some follow through today. So this one is a one. You know, if you can get back at $19, that looks pretty sweet. ANET, A-N-E-T, Arista Networks, another 52-week high. Not a lot of juice out here, but you did have a nice sign of strength. Would have liked to seen a little bit bigger pullback and then a move up to this high at 125 today. But what can you say? Another 52-week high. ATVI, which is Activision Blizzard, making a 52-week high. Same kind of pattern. That is a huge gap away, not much of a pullback, and back into the 48.77 high today. Video games still doing well. Baxter International. What do we have? Very interesting move out here, back up to a gap. What are we going to say on that one? And that is this gap to 40 or to 51.43. Last time you had about almost 10 million shares. You got about 5 million now. So not a lot of strength in that. BCRX, not much in that. C, which is Citigroup, Well, that one kind of spiked the high today, didn't it? Spiked a new 52-week high, gave it all up back into the trading range. CARB, which is carbonite backup service, nice pop on the same thing. Spiked the previous high. That high was 2130, did so with 2150 today. He had 430,000 shares the last time. Today, a little more volume, so you do have a higher volume high. And that CAVM, which is Cavium Networks, back up to this gap down that basically just ran for a long time. This is the 23rd of November in 2015. We're back filling it now. You had 2.5 million shares. Then you got about 1.6 million today. So probably not real strong. Electronic Arts, again, the gaming sector seemed to be pretty strong. This one's holding up even though it's on light volume on a 52-week high. ESPR, Aspirion Therapeutics, finally back to this huge gap down that goes back to the 29th of September 2015. You had 9 million shares that day. You're up about 1 million shares today in this one. So you fill the gap. I guess that's what matters. Extreme Networks, another huge pop up here. These are probably going to be ones you want to watch for a reversal signal tomorrow, but I don't see any reason to sell it if you are long. GBT, we talked about this one already. Looks like the gap at about $41 or $42. GLNG, which is Golar Limited. This is the tanker ships that liquefy natural gas. This thing's back up. Seems to like cheap natural gas, which is probably makes a little bit of sense out here. What you don't like is kind of the little reversal as we spiked into that gap on fairly light volume. GV. Missed it by that much. Okay, what do we have? Goldfields. The Goldfield Company, which I don't think is gold, is it? I don't think it is. Anyway, a nice pop out here today. Again, on a move up. INCY, which is Insight Corporation, and I don't see much in that. IRWD, excuse me, Ironwood Pharmaceuticals. Things just popping a little bit more up back into the trading range. So no big whoop on that one. ITB, this is the U.S. Homes Construction. Volumes are not all that bad, and another day up here. It's bucking the trend of the broader market. We'll come back and look at a few more of these when we look at it. Take a quick look at Sienna 2 when we come back.
TFNN has just launched a special event in Tampa with Tom O'Brien taking place March 18th, sponsored by Nadex. Tom O'Brien will be presenting 2 workshops for a combined 2.5 hours of education, bisecting and dissecting his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. March 18th kicks off with a continental breakfast as we get everyone checked in, and that is followed by 2 75-minute workshops with Tom O'Brien. The first workshop from 8:45 until 10 a.m. will cover quality volume, cause and effect, and ABC structures, and the second workshop from 10:15 until 11:30 a.m. will cover swing points, testing, and the Tiger Gartley. Tom will then wrap things up with a question and answer session, which will be followed by a Tiger Luncheon Social on the rooftop of the Westin Hotel. The best part is that it's all free, but you must register to attend. Visit the front page of TFNN.com for all the details and to sign up today, and we hope to see you in Tampa on March 18th.
If you're looking to unearth a new financial resource and diversify your financial portfolio, consider the new market-safe core commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 4 equally weighted commodities: gold, copper, WTI oil, and sugar, in one powerful CD. With no pricing caps, you can potentially earn an unlimited upside payment at maturity if the commodities increase in value across semi-annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of of interest on this index CD. Don't miss out. With certain commodities on the rebound, now is the time to take advantage. The March 23rd funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once more, that's 1-855-750-4051 or visit everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Well, I've got crude at $50.18. I watched the reaction at the EIA numbers today, and wasn't a whole lot there. Something must have changed throughout the day. What else do we have out here? Gold at $12.08. And I didn't talk about it, but sugar is up 7 cents today. The only thing I saw in the news that was interesting was a little quibble between the Mexicans and the U.S. on whether or not you could export sugar from Mexico. Not exactly sure where they're going to send that sugar if they don't send it to us anyway. I don't know if that's a big deal, but up 7 cents, which is a little better than some. KBH Homes, as we were saying, a little bit more volume the last 3 days in KBH, back up to $18.67 today on a 52-week high. Momo has some Momo, and it's Mo. Breaking out from the November 8th high at $28.44. A lot of volume out here, so you can't argue with a Momo of Momo. Morgan Stanley, another little peak higher out here, but could not hold that high today. Volume's about what it's been for the last 4 or 5 days. PHM, which is the Pulte Group, getting a little theme here with a breakout. Volume's going to be about the same on this one, though. July 27th, 8 million shares at 22.13. We've broken through that with 6 million shares. So is it going to be about the same? It is. It's not going to be a huge endorsement of higher prices, but we'll see. Even with a lot of times you get that last rush of home buying as interest rates go higher. I suspect we're probably halfway through it, maybe a little bit more, but we shall see. The Children's Place, we talked about that earlier, a real sign of strength, but probably a little bit too much, a little too hot, and that's probably going to come back and be a good buy. Quick, QUIK, which is Quick Logic, back up. It's a $2 stock, but at least back up through its September 14th low that had 500,000 shares with 1.16 million shares today. SKM. We'll go to Victor in Paramus, New Jersey. How you doing today, Victor?
Peachy. I'm looking for DO and RIG, and if you have a chance for a third one, FCX. Like, they're getting beat up.
Yeah, all of them are coming back with light volume and light energy. They're all coming back and getting ready. Huh?
No, I was looking at Diamond Offshore. It's like worth 20-something bucks book value on it. So it looks like I should buy these. And Rig looks like a really good, like they have a lot of cash. But interest rates go up next week, so they're going to pummel the market. Will that hurt their long-term debt, or you don't look at that?
I don't know. I thought that it's the best looking sector in the market. That doesn't mean that the whole market's going to go down, but if you want to be long, these things look like the best things to be long in.
That's what I was looking at. They have really light volume, right? What about FCX? Like, when the currency, when they interest rates go up, so it does affect.
This one's got a little clearer thing. I wanted to see this one at about $11.50.
Which one is that?
Rig.
Oh, that's where you'd pick it up at $11.50.
Yeah, there's a double gap back down there at $11.50. So that one may have a little bit more to go. I had some that looked pretty good that didn't hold today, so we'll see how the close comes in. But I think
what about Diamond
everybody's
Offshore? It closed. What about Diamond? It closed all its gaps. Would you touch that yet?
It's still too close to its previous low.
So it might bust down. Then you're saying it might hit even go back to 2009.
You got another 50 cents down or something. 14.67.
Okay. And what about, it's funny, NUGT Nugget, that's closed almost a few gaps too. That's like one more big gap to go.
Oh, let's take a quick look at
you
that.
Can't play a triple. All I know is I've been tracking the price of Nugget.
Where's the gap that you think it needs to fill?
The 562 or something there from December 28th. And there's one before that. But I noticed it keeps on losing its price. I checked the price of gold like 3 months ago when it was the same price as today, and it was like $12 a share. Now it's like $7 a share. So this fund is just, it sounds like it's a totally it's a messed up fund. You know what I mean?
Almost did it, didn't you?
Yeah, right?
Okay.
Something's wrong with it. It's losing its energy all the time. So it's a loser fund. You got to just pick it right to make some money, because lately it ain't going nowhere.
I haven't been a big fan of trying to buy gold into higher interest rates. We've heard arguments on both sides that, they're not going to raise rates. I don't know. I think now, maybe there's somebody new that comes in behind Janet Yellen, but I think Janet Yellen, come hell or high water, is going to raise rates 3 times this year. So
unless you have an earthquake in California. You could have an earthquake in California.
Yeah, that ain't gonna help your trade though either, right? So it's not like if we get aliens coming down here with their acid for blood, it's gonna help us either. There's a lot of things that can make it, but that all things being equal, it looks to me like she's committed to 3 rate hikes this year.
So
I've never heard anybody say it that clearly as she did last Friday. No,
does that kill the price of gold or something?
Yeah.
That'll create the next recession, you know that.
What, gold going lower?
No, if you do 3 interest rates.
No, not necessarily. Normally what, at least at the very beginning of raising rates does, is take people out of things that they should not be in the first place because of incredibly easy money, and moves them into the things and reallocates cash correctly. So the whole idea that everything blows up is not wrong. What it does mean is that stocks that probably were getting a lot of free cash are probably going to pull back. Stocks that don't need cash. Huh?
There's no buybacks, you're saying?
Yeah. Buybacks will be less. Stocks that don't need a lot of cash. In fact, like Apple, Microsoft, almost all those guys did huge bond deals in the last 6 months. That means they're not going to need any cash. So higher interest rates not going to bother them at all. And, of course, if any of the tax stuff passes, they're going to have, literally mountains of cash coming back to them. Huh?
This bubble will continue.
Say that again?
The bubble. The bubble. It's a big bubble. You have gaps all over the place on it. Down.
Yeah. There's some.
When we hit, the longer we go, the worse it's going to be.
You could theoretically grow out of it, and I guess the policy right now is that we'll have a handful of companies that have $2 trillion overseas. They're going to bring that $2 trillion back. A lot of that's going to make a stronger dollar, which is kind of what we're seeing out here today. But again, stronger dollar doesn't help gold. There's a lot of things that, in my opinion, don't help gold. You've got to, even in some of the other things, you've got to basically look for an apocalypse to really say, okay, something's going to change. I just don't see it. I know there's going to be a lot of yelling and screaming. There's a limit
when it comes to debt.
There's a limit to the amount of outrage that the American people can continue to have. Eventually, they'll go off and start watching movies and seeing what summertime's like and grilling steaks, and we'll be back. Maybe a more even deal. We'll be back after this short timeout.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we're back going to the phones. And where's it at out here? I can find it here.
It's California, Lakewood.
Who do we have? Mike from
Mike
Longwood.
in Lakewood, California.
Okay, there I found it. These things scroll by so fast.
Yeah, that's
How you doing
fine,
today,
no
Mike?
All right, it's not nice and sunny here today for a change, so.
Yep. It is here, too. It's just my air conditioning's broken. It's now 50 degrees. So we'll find out. It's either going to be 100 or 50. I can put more clothes on. I don't think I can take more clothes off for the show.
Yeah, I don't need any air conditioning today. It's good.
Yeah. What's take a look at Starbucks, is it?
I have April puts. They're in the money, so I'm basically short with puts. What do you think about Starbucks?
What strike?
57.5. So
I mean, I like the play. Would you go up there and short it when it kind of filled this gap up here?
Right at the open this morning. So I was a couple minutes early.
Yeah, I would have, you kind of like that $57 level up there to probably pull the trigger when it went short, but I could see it. What month?
April. So I've got 6 weeks.
You got the CEO leaving, and it's not that you pretty much block off the long side because, of course, they're going to want to come along. Any new CEO is going to want to come along and clean the books up. And depending on how long the previous CEO has been around, there's always a little bit of, I forget the quote, but books are either gently roasted or totally burnt to a crisp. And there's always a little bit of that cleanup that goes on when you get a new CEO. And I think you're probably pretty good on that. Where are you looking down at $50.61?
I'm looking to go down somewhere between 52 and 50, somewhere in that ballpark.
53.81 would be the first level that I'd be looking at, the February 1st low.
Okay.
Could you get it? Now, if the market decides to head lower, the only thing I dislike right now is that market looks like it just wants to go sideways. And that is problematic for puts for the next couple of days.
Yeah, what I was looking at, there was some news out that talked about about competition, when there's always competition. That and the fact that their computer, ordering system was fine, but not the greatest. And again, the competition was starting to cut into that advantage.
Yeah, I wouldn't subscribe to that. The biggest problem I think this company has, new CEO, and the old CEO stuck his thumb in half the American public's eye with the idea that he only wanted to hire people not from this country. And believe it or not, I've seen some articles and some things out there that are basically saying that they are way down the last 2 to 4 weeks of traffic, people going to Dunkin' Donuts. So I don't know if there's a long short in here, long Dunkin' Donuts, short Starbucks, but I've talked to a few people that say that kind of ticked off about the CEO.
Okay.
Again, on whatever side you take, you're going to tick off half the American public.
And one more thing I was looking at was since they're trying to expand, and part of what's in the stock is expanding overseas, I was thinking they'd be getting some more blowback about whatever else is going to be going on with trade or negative press because of the president or whatever, and that might also have some effect.
I don't think so. They're so far left that, they can claim immunity from all that.
Okay,
to me,
that's good. I know you're running out of time, so thanks very much.
Yeah, to me, I would look for 53.81, and if it breaks there with volume, $50.61.
Okay,
anyway,
great.
I'll be back at 4 o'clock. We'll see you then. So when you can, not when you have to.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.